What's up, everybody? Welcome back to another episode of Blazing Crypto Profits. So, today, session 7, we will be covering gap ups and gap downs. So, previously in the presentation, you may have heard me refer to terms such as gaps. You may have heard me say this stock gapped up or this stock gapped down, So, you were probably wondering what I meant by that. And the purpose for me doing that is just to get you used to the language. And now that when you see it, it's going to confirm what you've been hearing or what your mind has been trying to make sense of. Okay? So let's get straight into the material. So here we're going to be understanding gaps. We're going to attempt to understand the gap, why they occur, how they occur, and just a basic understanding of what the gap is. We don't need to go into the minutest detail of the gap, but we're going to understand what a gap is. And by the end of this presentation, you'll be able to tell your mother, your father, your grandmother, your child what a gap is. You're going to be able to say, hey, look, this is a gapper. This stock gapped up, or this stock gapped down, and this is why. This could possibly be one of the reasons why. Okay. So, a gap in a stock's chart occurs when there are motivated traders that are looking to participate in the development of a stock's price action pre or post market. Now, there are traders that look to take a position pre or post market, anticipating a move in either direction, whatever direction they desire when the market opens. In any case, all action within these hours should be looked at as anticipatory and are not recommended trading hours. The reason being is that during these hours, sometimes the volume is extremely low. So, you may get into a position and, you say you see a flag pre-market, intraday. And rewind. So, since we're going to be covering the gaps, this is the end of the swing trading portion of the class. We're going to start going into smaller time frames and start to understand what's going on those smaller time frames, basically what's going on in that daily candle. You see, so if we have one candle and it broke out of a resistance level on the daily chart, what we're going to do is go inside that candle and see if there's an opportunity where we can enter the stock and exit in that day. You see what I'm saying? So this is why we need to understand the gap so that we can capitalize off of the gap. You see what I'm saying? Okay. So getting back to that pre-market action. So if the stock market opens at 9:30, that means that from at least 7:30 to 9:30, there's pre-market trading going on. And say the stock market closes at 4 p.m. That means from 4 p.m. all the way back to 9:30, or at least pre-market 7:30, that's going to be post-market. So yes, there is trading that occurs post-market and there is trading that occurs pre-market, but it's not recommended. Now, getting back to these patterns that I was telling you about, say you see a flag pattern intraday on a smaller time frame. It could be the 15-minute time frame, the 30-minute, it could be the 5-minute time frame, all the way down to the 1 minute, right? You see this flag pre-market. Now, you say, oh, this thing is juicy, I want to get in. Now, say you get in and then liquidity dries up, meaning that the volume disappears because the volume's already low. Say it's on, 100,000 shares of such and such a stock being traded, and now there's nobody for you to sell your position. You bought that breakout pre-market, but then that breakout is failing pre-market, and then the stock starts the next price for you to sell is way outside or way below where you actually did want to get out of the stock. You see? So this is important because knowing about these kind of pitfalls pre-market will prevent us from taking unnecessary losses in day trading. Now, if you want to become a pre-market trader, then I suggest that you study trading pre-market. But I mean, there's hundreds of thousands of strategies out there to make money in the stock market, and I'm sure there are many traders that only trade pre-market, but that's not what we're going to focus on, because there's too many pitfalls, too many variables at play. Say you're trading pre-market, and then the stock starts to tank pre-market. Professional traders will become uninterested in the stock. You see, so the stock could look good pre-market, but when it starts tanking pre-market, traders don't even want to be in it. Traders are like, well, it's already dying pre-market. I'm good. I don't want to get in. It's already broken past levels that I wanted it to break. So I'm not interested in this thing anymore. And then, you might find yourself holding it or trying to get out at a worse price. And then stock opens up and then it starts tanking, intraday. So we're going to get used to this. We're going to understand this as we start going through our intraday setups. Okay, so let's get into the mind of a person who bought shares of a stock pre-market, right? So as they're going through their morning scan, looking for a stock, looking for a gapper, right? These are our gappers now. They see a stock that has good news, right? The stock has good news, which supports their claims that the stock will continue higher once the market opens and fresh buyers come into the stock, right? So let's just remember that. Now, if that was a little bit difficult to understand, just rewind it, listen to it again, or pause it, and then try to read it for yourself, okay? Let's get into the mind of a trader that is faced with the stock that has gapped down pre or post market, right? So let's get into the mind of this trader that in a stock that's gapped down. Say you're in a stock, right? And you follow the Warren Buffett rule. Invest in a company that you would invest in. You don't care if it goes up or down, or invest in one that you want to hold for 10, 20 years, right? Or something, right? But you got $3,000 in this thing, it's probably, maybe your last $3,000, you just want to try to flip it or something. And then, but the stock, instead of going up in your favor, the stock gapped down pre-market, meaning that sellers came in or sell pressure came in. Maybe it was some bad news out on the stock, and people just want to get out of the stock. People want to get out of the stock. So the stock is now trading down, meaning that when it opens at 9:30, from the close at 4 o'clock to the open at 9:30, now the stock has gapped down. There's going to be a gap in the stock's chart. There's going to be a gap. You see, that was caused by trading pre-market. Okay. So when this guy that was holding his stock long and now it's gapped down, if it's gapped down significantly past his stop loss and stuff, he's now like faced with the decision to say, oh man, do I stay in? Do I sell? There's so much sell pressure here, and this is what we're going to go over. So let's just understand the gap and what happens with the gap and how to manage these gaps, okay? So there are two kinds of people that we need to take into account here. One guy has been holding the stock long term and has now discovered that the stock is dropping in price at a rapid pace pre-market, right? Now, this person now is extremely motivated to cut their losses. They're like, man, this thing is going down. I bought the stock at $20 and now it's at 15. Now it's at 14. Now it's at 13, right? Man, what am I gonna do, man? As soon as trading opens, as soon as the 9:30, I'm getting out of this stock, man. This thing gapped down on me, man, right? Now, this person is extremely motivated to cut their losses before the market opens, and it drops faster as a result of more motivated sellers. You see? So there'll be people selling pre-market, and then when the market opens, 9:30, there'll be more people selling. Oh man, I done cut my loss. I'm selling this stock. And then there's going to be the latecomers that come at 10 o'clock. Then there's going to be even more latecomers that come in at 12. So let's go. Let's keep on going. Now, guy number two. We're thinking that we're talking about the stock that's gapping down. Guy number two is a short seller. This is his primary thing. He loves to short stocks. He loves looking for stocks that are going down because it's like easy money for him. Okay? So guy number two is a short seller who has also done his scan pre-market and has discovered that this stock has bad news out, which is driving the price down pre-market. And he's understood that there may be other motivated sellers as well as short sellers that are piling into the stock, which results in the price dropping even further once the normal market hours start. Okay? So, pre-market trading is not recommended, but it is critical that we understand what is happening and why these gaps are caused in order for us to execute properly when the opportunities present themselves. So, what are these opportunities that I'm referring to? In order to understand these opportunities, we must first be able to tell the difference between a high probability gap and a low probability gap. So in a gap up, we are looking for a stock that's gapped up out of a clear pattern on the daily chart, right? Say a flag, say it starts a flag. If we're looking for a gap, we want to capitalize off the gap, right? We're looking for a flag on the daily chart. Plain and simple. The daily chart is our best friend, okay? Die hard to the end. Okay? So we're looking for a stock that's gapped up out of a clear pattern on the daily chart or clearing some technical resistance, right? Some resistance, technical resistance. We want to see that price has cleared over the moving averages and that it's gapped up 4% or more. Now, for a stock that's gapped down, we are looking for a stock that is gapping down maybe out of a huge multi-tap breakdown. You remember when we talked about breakouts and breakdowns? Remember when we talked about the multi-tap breakdown? The stock is testing the level, testing it until it cracks. We're looking for a stock that gapped down from that thing, right? Because that shows that this thing is like super great. Like first, it was just testing lows. It was testing lows, but then this time, pre-market, people really wanted to get out of this thing, right? So it got down, right? So it's right here now. So now short sellers are like, man, I think this thing is going to go down here. From what I've studied, it can go down further in these type of situations. So if I short sell up here and then cover down here, then I can keep the profit in between, right? So we're looking for a stock that's gapping down out of a huge multi-tap breakdown, some kind of triple tap breakdown, gapping down out of a bear flag or something like that, or gapping under the all significant major moving averages, and idealistically some sort of technical resistance, or even better, if it's nothing under it, if it's gapped down under everything above it, all the price action moving averages, support and resistance is above it, and the stock gap down. That's something that we can look for too. And then we need to also understand that, like I said before, this is not an exact science. So you may get 10 gap, you may see 10 gap downs, right? And maybe 5 of them will go down. 2 of them will go sideways, and 3 of them will go up. You see? So you have to be prepared to capitalize off the thing. But we're gonna get into this thing. I mean, it's gonna be great, guys. It's gonna be great. So let's just learn and grow. So what do I mean by this? Let's look at some examples of a gap. Let's focus on these gaps. You see, so by now we should know support and resistance, trends, right? Uptrends, downtrends. We should know a little bit about our patterns, our flags, our breakouts and our breakdowns. Now let's go ahead and get into some gaps. See, we're getting a complete understanding here, guys. We're getting a complete understanding, and then next is we're about to go inside. We're about to go inside this thing. And now have no fear. Have no fear. Hold on tight. Make it through this class, because at the end, it's all going to tie together, and it's going to be great. I promise you. Okay? Man, that's perfect, guys. Look at this, guys. Let me show you guys something. I was watching a video about on the Clara Muhammad School website, and what they had was they were teaching the students how to write. They were teaching the students how to write. So I've been wanting to help my son learn how to hold his pen. Right? He's only 4 years old. Nice, yep. He's only 4 years old here. And but this writing exercise, as soon as I saw it, I said, wow, that's great. This is something that he can practice every day and learn how to use his pen and learn how to hold his pen and write his letters more neatly. So he drew the circles here. He drew his lines here. Triangles here. I mean, this is great. And then the angles here. So I mean, this is great, guys. I just wanted to show you this, guys, because it makes me so happy. Okay?
Look on the back.
And then he signed it. Mikael wrote it. Oh, sorry, Zane. All right, guys. I'm recording the video now, so I'm gonna be downstairs in a little bit. Okay?
You like it?
I love it. It's great, man. You did a real good job.
Let's share
All
with
right.
you, Daddy.
Hmm?
Let's share with you.
You gonna stay with me?
Mm-hmm.
All right. You gotta be quiet though, okay? 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 Okay, so let's get into some examples of these gaps, guys. Oh, okay, wait a minute. Woo, y'all not ready for this, man? Y'all not ready for this, man? That's good, right, babe? That's good, right? All you need to do is do that every day. You're going to get better and better. All right. Man, y'all not ready for this, man. I'm telling you, man, it's about to get crazy. It's about to get crazy, man. All right, so this is PRQR, right? Oh, man. I'm so excited, man. I can't contain it. So check it out. This is PRQR. Look at this thing, right? So this PRQR, we had a nice run up, right, since May. Then June, it started to find some resistance in June, right? You got to test that highs, 1 test, 2 tests, 3 tests. Then you got that tight consolidation right there, right? You got you a clean resistance level. Then you got that gap. Now this was caused by trading pre-market. Motivated buyers, right? Highly motivated. So, this is crazy, guys. Oh, man. Oh, fireworks. Look at this thing. Stock gaps up, right? It's trading pre-market. Now, you got your pre-market buyers. They probably saw the news, right? What could have been the news on this day? We can check it out, down the line, right? Let's say the news, this happened 9/17/2018, around September 2018. I don't know what the news could have been, right? It could have been anything. Could have been some blockchain news. It could have been a deal with Amazon. Maybe Amazon's buying this company, right? Or something like that. So the price shoots up because everybody knows that Amazon's in it. Shoot, man, I want to get in it too. So pre-market traders are like, they see that news, 7:30 in the morning, they put down 100 shares. I got 100 shares of this thing, right? Might have cost them, $8,000. You see? And then they hold it. Stop loss right under these moving averages right here. If it goes on these moving averages, they get out. That's it. But they in it, right? Then boom, the stock opens up. Remember that? Remember where the candles opened, right, guys? We talked about that. Remember those bullish candles? They got you open, right? And then this is where it closed. Price went higher that day. So the stock opened up. It could have danced around a little bit. Could have started tanking, right? From the profit taking. People start taking profits. Could have tanked until it met your shortest term moving averages, which is that 9 exponential moving average. Came down in the area of that 9 exponential moving average and bounced. It bounced intraday. Let's look at what happened inside that day and see if there was an opportunity where we could have capitalized off of that day. You're not ready, man. I'm telling you, man. It's about to get crazy, man. All right. I'm gonna try to have some self-composure here, okay? Look at this thing. So remember that stock opened up, right? This is the same day. I was loving this thing, so I was so excited to see what happened on this day and to share these lessons with some special person out there that wants to change his life or her life and their family's lives. I was so excited that I had to find this thing. So look at this. This is PRQR, right? So remember, this is this day. We got a flag. We got high relative volume right here. Well, not before, right? The volume didn't come in yet, right? The volume didn't even come in yet. We got the flag. One second. All right, guys. Okay, so let's see. Let's look at what happened here, right? So stock opens up pre-market. Remember that flag, right? This is that flag. This is that day right here. This is the day before the news came out, which caused the gap up the next day. Now that news could have came out pre-market. It could have came out post-market that day. But in any case, there was news that happened after this day and in between these days. So stock gaps up, pre-market trading here. Now there are platforms that will show you pre-market trading, such as Thinkorswim, TC2000 will allow you to see pre-market trading. It's just an option to have, but you know, it's important to the pre-market traders, right? All we need to know is that there's going to be a gap in our situation for what we do. So the stock gaps up. Remember what I said? It could have tanked at the gate from people taking profits, right? So people are taking profits. You know, this thing comes down. Now I don't have my non-moving average on here, or this might be it. But stock comes down to a price level, bounces. You get a first bounce here on the 5-minute chart, but then it's still got some profit taking. People are still taking profit because this thing is way up there. Imagine you was holding this thing, you know, in this flag as it curled up, and then it gapped up on you $10 all of a sudden, and you had 100 shares. You know, what is that, $1,000? $1,000 right there. Yeah, you taking profits. So imagine all the people taking profits. Then boom. So buyers know, good traders know that, and they're waiting for some support level to kick in. They're waiting for higher lows. They're waiting for a small sign of an uptrend. You see, so you got a little bit of an uptrend here, right? And you got that bounce, right? So boom, stock tries to come up. It meets this area right here, but starts to cause a resistance level, right? So resistance level is now in, and then we have support and uptrend support. So now stock is coming here intraday. This is the 5-minute chart. All of this is going on inside this day, inside the hours of this day, right? 5 minutes. So another 5 minutes, 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 right? Until it gets real tight. You get that squeeze. Now that pimple's ready to pop, right? Because it's at support and resistance is meeting and squeezing it. You're squeezing it. So now it's got to pick a direction. It's got to pick a direction. The Bulls and the Bears can't win on this one. Somebody's got to win. So the Bears may be like, man, I'm not getting in front of that train. There's too many motivated buyers. Why am I gonna sell it right there when the price is gonna go up on me? Then I'm gonna owe, you know? Buyers are like, man, this thing looks good. There's a whole bunch of motivated buyers. My team is here today. My team is here today. This is the team that I want to be on. So look what happens. You get that 5-minute candle right there. That strong candle. That's strong right there. No weakness in that. Zero weakness in this candle right. Zero weakness in this candle. Your signal. Boom, you in that thing with a stop right under the pattern. Boom. You get that breakout. Man, you take a little bit of profit into the spike. Boom, stocks come down, but it don't break your moving average. Trail your stop loss up the moving average. Boom, you get another parabolic spike, meaning that the stock's price just went straight up. Bam, went straight up. Another parabolic spike. Bam, you're taking off more profits right there because you don't know. You're going to gain experience if you decide to go this route. And you're going to see sometimes you get these parabolic spikes and then sometimes it'll drop right after that parabolic spike. You see? But this is all things you get used to as you develop your method, as you hone this strategy. You know, like you'll hear people say, I'm not going to get into those kind of lessons now. Let's just focus on the patterns. So we get that straight run up. That was our move right there. That was our move, right? And as soon as it comes down and starts breaking the moving averages, we're out of it. Because we don't know as soon as it breaks it. This candle was red when it breaks it, but it closed green. But at the time, it was red. Could have came down, could have came down, could have came down, could have came all the way down. You don't know that. All we can do is get out when we're supposed to, which is when it starts to break those moving averages. Right? So what happens here? Stocks, chops around. We start hitting zombie hour, 12 o'clock. That's when that's when Wall Street goes out to lunch. You see? So and liquidity dries up. That's when you get that sideways action, right? That's when the people in there just getting chopped around. That's when traders that are not disciplined or consistent yet start to get chopped around and lose their money. They're in the spin cycle, zombie hour. You see what I'm saying? Real traders are done right here. Real traders are going back to the beach. They're going to the beach, man, for a swim. Yeah, I just made $2,000 today. I'm done, man. And it's only 11 o'clock. I just made $1,000 today, man. I just made $200 today, man. I just made $50 today. I'm trying to build my cushion up. You see what I'm saying? So you get that sideways action, then you get another breakout. Get another breakout right here of this resistance level. 1 test at highs, 2 test at highs, 3rd test at highs. Even though it was a little extended going into the run up, meaning that it was just straight buying, no profit taking. What goes up must come down. That's a sign, but it broke above resistance, held it now as support. See, when it broke above this resistance area, came down to test it, and now it's holding it as support. Stock continues higher, right up the moving average. That's your second entry. And then when it breaks the moving average, you out of it again. You see? So that's just that. This is beautiful, man. This is how we capitalizing off of these gaps intraday. And even on a swing standpoint, right? We want to treat the same thing that we see on the daily chart. These same patterns that occur on the daily chart occur intraday. Minus the gap. It's very rare intraday you're going to see a flag and then you're going to see a candle gap up intraday. No. But pre-market, post-market, you're gonna get these gaps. And this is what traders play these gaps all day long, right? So even from a swing standpoint, we see the stock gaps up, right? We want to wait for it to come down to some support level or at least break a resistance level telling us that it's going to go higher. Imagine if we bought this at the top of this day. The next day is coming down. Next day is coming down. We don't know how far it's going to go. It might be a little bit dangerous. You may just want to, get in these patterns right here if you're swing trading and anticipate this kind of breakout. Instead of buying it way up here. For a swing trade, I would never recommend buying this right here. It's way too far up. But you can capitalize off of the intraday moves on it. You can capitalize. Now, if you got the money to go ahead and risk from here, maybe $18 down to, maybe $12 and down beyond, then you can go ahead and try to do that. But for our particular strategy, if you were to ask me, hey, Abdul, man, I'm thinking about this. I'm thinking about buying this, and holding it for a swing. I'd say, nah. That's just me being safe and cautious because of, things I've experienced. But, at the end of the day, it's you that is going to click the button. You're the one that's going to click the button. You're going to make the decision to buy or sell. So it's nobody's fault but yours if you make money or lose money. Man, 30 minutes on one gap so far. Now, this is PETQ. We might get through this thing real quick. PETQ. Stocks give you a nice pull. You got your run up, find some resistance at the $30 area. Boom, comes down. Bounces off of your moving averages. Runs back into that resistance again. Boom, comes down. Still trading in those moving averages, right? But it's still within the range of the Bollinger Band. We still good, right? So now we got a nice tight consolidation. We get that pimple squeeze. Boom, you anticipating it? Stop just under the low of the pattern. Boom, gap up. Could have had some good news out. I remember this day. I remember this day right here. I traded this thing. This was a messed up day right here, but I traded this thing. But then the next day, well, hopefully we can see in the intraday slides, I mean, it was beautiful, man. I mean, it was daggone flag after flag after flag. It was like 6 flags back to back. I mean, that's daggone beautiful. But as a new trader, you can't really capitalize on it because you're just learning. But that's beautiful, man. So look at this thing, right? This thing gapped up, and then, so you know, I mean, can you do this? Yeah, right. You can. But it's recommended to do, if I were to swing trade gaps like this, I would do it with such small size that if it went past my intended stop, it would still only be 1% of my account. You see, so say my account is $5,000, right? I got a $5,000 account. I only risk 1% of my account, meaning that I'm only willing to lose 1% of my total account value on any particular trade. So if this stock was at, you know, say $38, $35, right? Say it's at $35. It gapped up and it closed that day at a high of $35. My stop loss is going to come right under these moving averages here, which is going to be about $30. So that means that there's a $5 difference between my entry price and where my stop loss needs to be. So if I'm only risking 1%, if that's $5, if that's a $5, if the price between my entry and stop is $5, then that means I need to calculate that amount of shares to equal 1% of my account. Meaning, so let's do the math. So $5, and I can only lose 1%. So what is 1% of $5,000? That's $50. So $50 divided by 5. What is that, 10? 10. So I can get 10 shares of this puppy. 10 shares, if it comes down $5 on me, I lose $50 right there. That's it. Right? But if it goes up $5, I make $50. If it goes up $10, I make $100. If it goes up $15, I make $150 off of those 10 shares. And you can see doing this kind of thing over and over and over, when your winners are bigger than your losers, which is what we aim to do, make our winners at least 2 to 3 times bigger than our losers, which in this case it would have been. Right? Say this was only a $5 stop, but this thing went up. You can already see it went up here another $5, and it could have went up even more than that as it starts to develop more patterns. You see? So let's go ahead to another gap. So this is SSKN right here, gap up out of a bull flag. This is SSKN. Now these are some nice tight gaps, right? So we got our bull flag here. Boom. We got a nice pole right here. And look, stock closed up here. And then look what it did. Gap down, right? Pain, right? Gotta take them profits. People start taking profits pre-market, right? Motivated sellers. Yo, this thing's coming down. Comes down to the moving average. Moving averages catch it for 1 day, 2 days. Tanks under the moving averages, but closes back above the moving averages, right? Holds it, right? And then finally bounces off of this 200 moving average right here. Right? Then goes higher. Find some resistance. Boom. Right? Find some more resistance. Boom. Then we got a gap up out of this pattern. See that? I don't know if you guys can see that, man. Let me zoom in. For my people watching this on their phones, because I watch a lot of this stuff on my phone. But if you're watching it on a computer, you can see this a little bit more clearly when I talk about things. But all right, so we got a resistance level, right? See, price couldn't make it above here 1 time, 2 times, 3 times. And then this time, it finally pushed above it a little bit, outlined in the sand, and gave us a small pre-market gap. Now, there weren't that many motivated buyers in this thing, but there were enough to keep it up, right? And there weren't any sellers in this thing. There weren't no short sellers, right? So this is beautiful, right? This thing gapped up. And this is a low price stock, so we can load up on the shares, right? not only can we load up on the shares, but it's also close to where our stop out needs to be. So that means that our risk is extremely minimized. So in this situation, we would have risked what? Let's see from where it was at, maybe $2.25 down to maybe right under this moving average, $2, right? And maybe not even that, maybe 205. So let's say we were risking 20 cents on this trade and we had a $5,000 account. You have a $5,000 account. So we can lose $50. $50 divided by 0.20, that's 20 cents. That's how much we have to risk. Our entry minus our how much we have to risk will give us the amount of shares we can buy. So we got to get 250 shares of that. Meaning that if 250 shares, if it moves 20 cents, if it goes down 20 cents, we'll lose $50. We'll be out of the stock. That will be 1% of our account. If it goes up 20 cents, we make $50. 40 cents, $100. You see what I'm saying? If it goes up $1, it's $250. $2, that's $500. Look at this, guys. So this stock gaps up, right? Minimized our risk. Stop loss right under this, right under the moving averages here, or you can put it under the pattern, whichever one makes you feel more comfortable. Boom, we get a nice 4-day run up. On the 5th day, you can imagine this thing probably was outside of the Bollinger Bands, right? Extreme levels, it's got to come back. This thing comes back, gets caught by the moving averages a little bit, tanks a little bit, past this the 9 moving average as it's in this pattern, bounces off of your 20 intraday. Boom, then what do you get? 1, 2, 3, 4, 5, 6, 7 up days in a row. After that, right? And you could imagine this thing probably opened outside its Bollinger Bands again. Boom, big profit taken. All your short sellers said this thing went up way too fast, man. I know some motivated sellers in here. I know some profit takers in here, so they try to short it, right? What does this thing do? People shorten the train. Now it's more motivated buyers in there because all these sellers got to take profit, right? And then all of the other buyers, they saying, man, this thing is still going up, man. I want to get in on this consolidation right here. This consolidation. Say, I want to get in on this consolidation right here. Boom, and what happens? Breaks over this little intraday level right here. Now, it's not the cleanest level. Don't get me wrong, guys. But it happened intraday. And you need to be mindful of that. See, now, this is what the mentor will be able to help you with. See, I had to figure this out on my own. It took me the better part of a year to really understand this. You see? Understand what's happening here. You see? And you got to put in the work to understand what's happening here. That way, you'll be able to capitalize. Like they say, the one who gains mastery creates his own opportunities, right? I keep that on my phone as a reminder. Keep that on my phone as a reminder. One who creates mastery creates his own opportunity. One who obtains mastery creates his own opportunities. So look at this thing, right? This thing is beautiful, man. You know, usually I go back and look at the charts, but it's just I don't want to blow too much time on here. I mean, in the future we can do stuff like that. I mean, I'm down for it. I'm down. I want to be down, right? All right. Let's go to another gap. Look at this. Man, I get carried away sometimes. Come on. All right. That was SSKN. This is HIIQ. I mean, this thing is going on. This class might be longer than I thought. I mean, so look at this. We got nice level here. We got a nice flag. You can call this a flag. I call it a flag. Or even you could just call it technical resistance. Technical resistance is the same thing. Right? So stock comes down, breaking all kind of levels, making bear flags and doing all kind of pullback shorts. Right? Then this thing starts to rally, making higher highs and higher lows. Right up into resistance, right? Comes down, right back up into resistance. Traders are watching this thing now. This thing is getting tight. Now people are buying it up when it goes to lows. People are buying it up on the bounces. You got your pullback buyers. They're getting them good deals, right? They're buying it. Be smart. Be smart. You don't want to anticipate way back here. Nah, don't get me wrong. You don't want to be anticipating way back here. Now, if you get extremely skilled, you get above my head. You can catch these bottoms. You got to teach me something, man. All right? You can catch these bottoms. You got to teach me something, man. But that's like, in trading, you need skill and you need a little bit of luck. Okay? So look what happens here. Stock gaps up. Stock closed here this day. Next day, stock gaps up. So what a trader's saying, man, this thing gapped up above technical resistance. I'm in this puppy. What a swing trader saying, man, I've seen this happen about 4 or 5 times, 4 or 5,000 times. Man, I'm in this thing with a stop on the lows. If it stops me out, yeah, I'll get out for 1%. But if it goes in my favor, man, I could possibly make 10, 15% off of this thing in a month or two, right? Boom, closes high. Next day, stock gaps up again. Oh, it's on now. Traders want to know what you got going on, HIIQ. Look at this thing, man. And then this thing comes up. We in this thing as swing traders, just trading off of the daily chart. As soon as it breaks out 9 moving average, we out. Yeah, we left a little bit of money on the table. But so what, man? We out of this thing, man. That's it. That's what we do. That's what we do, man. Let's do this, man. And look at this thing. You get another flag. Then what happens here? Stock closes on this day. This very last day here. Gaps up. Breaks this technical resistance here. Technical downtrend resistance. But it doesn't close strong. Close a little bit above 50% of that candle. Was it the end of the day already? I don't know. Still more buyers in that thing. But now this thing is like, it's kind of up there now. So you got to be a little bit worried. But from all this profit cushion we made, I mean, we was in this thing since what, 35? And now we out of it at 55, $20 move. Come on, man. Do the math. This ain't hindsight trading. This is being prepared. You see what I'm saying? While other traders are out there, what are they doing? What's today, Sunday? If you ain't at church or something, you know, you getting over a bender, you know what I'm saying, from Saturday night, then you think you're going to come on the charts. You think you're going to come on the charts on Monday morning and out-trade us? You're crazy. This ain't hindsight trading. This is being prepared. This is what you call studying the past. You see what I'm saying? What did they say? Who said this? Malcolm X. How can somebody know where they're going? How can somebody know where they're going if they didn't know where they've been? Or to know where you where you're going, you need to know where you've been. You see what I'm saying? Something like that. I don't know. But this is just what I'm saying, man. Sometimes I get like, you know, too much teacher mode. But you know, this is life, man. One day I'm gonna be gone. So I'm trying to share this knowledge as much as I can for everybody. My love for all good people in the world. But you know, all good people. All right, I'm sorry. I ain't gonna go on a tangent now. A rant. This is too much, man. I mean, I'm gonna have to split this thing up. Look at this thing. Technical level, right? Look at this thing. You got a gap here, but it ain't beat your technical level. You're good. Don't worry about it. Don't worry about it. Just do what you gotta do. Finally comes up here. Yeah, you got it's starting to move over that level. You know? I mean, even if you could say here, you could draw some downtrend resistance. You know, we got a gap here. You want to be in it. That's perfectly fine. That's perfectly understandable. Get with a trading buddy. Get with a partner. See what they think. Take the risk. If you don't feel good, but you really want to take the trade, go in with even smaller position size. Buy 1 share. You know what I'm saying? Something like that. Or at least enough to pay for commissions if it works. Right? Look. Stock breaks out of this level, comes down and retest it. Pulls back to price support. Bounces off of the moving averages and price support. Right? Comes back up on this daily chart here. Breaks this downtrend resistance. When it gaps up here. Gapped up. Right? So Who's to say what happened after that? That's our signal. That's our signal. That's what we do, right? That's what we do. Right or not? Right or not? That's what we do over and over. All right, I know I said I wasn't going to do this, but I want to see what happened with this stock. CSCO. So this is the daily chart. Yeah, it was around September. Like I said, man, we've been in a big distribution market, so not much continuation out of this one. Let's see. I said everyone is not going to work. Boom. Look at that. Comes down, bounce off your level. Downtrend resistance. Even here, man, but you know, basically what I'm doing is connecting the wicks. See? That's levels, man. Intraday, that is levels. When you go to a 30-minute chart or something like that, that's price action. Bouncing off of here, coming down, bouncing off of the moving averages intraday. You see? On these small time frames, coming back to this level, bounces off it again. Come back to this level, bounces off it again. Come back to this level, breaks through it, but then sellers are like, no, man, this is resistance. Boom, it comes back down, right? Then it finally squeezes. You get a little bit of a gap up. You get a little bit of a high volume on this gap up. So you wouldn't be wrong to be in that. Like I said, everyone is not going to work. But it matters if you're managing your risk on this thing. That's what matters. That's what makes you profitable. Managing that risk is and doing the same thing every time. That's what's going to make you consistent. Because your winners are going to always be bigger than your losers. You see? So big distribution market, and now this thing is bearing out on us. I mean, this is crazy. You know, you new people watching this, it's really hard for you to understand, you know, what's going on. And even like Charlie Mandan said, he was saying, you know, I don't know if I had to trade in this market as a new trader, I don't know if I'd be a trader, you know, because things are crazy. Things are crazy. But this right here is valuable experience. And if you can make it through these times, learning as a trader, then when the bull market comes back, oh man, it's going to be so smooth and fun. You're going to thank yourself so much. You're going to thank yourself so much. You're going to thank yourself so much. So practice, practice, practice. Put in the work, put in the work, put in the work. Get on the simulator. Don't throw any money in the market. You don't have to. You don't have to, man. You don't have to. All right, so let's just keep learning these gaps, okay? Do not try to put money in the market on these patterns. Not yet. Not until you are absolutely 100% comfortable with what you are doing. Okay, I'm coming just now. Okay, this is about 10 minutes. Let's see. That was CSCO. AMD. Gap Central, right? What do we have here? Flag. We got pole, right? Flag. Breakout. Hold. Breaks this technical resistance area. I mean, how beautiful is that? 1, 2, 3 tests. You want at least 3 or more tests of resistance. You want at least 3 or more tests. Now, that doesn't mean that you're not going to fall victim to trying to do breakouts that only have 2 attempts at highs, because sometimes you'll see that start to go up, come down, do a pullback, and then keep going, right? That doesn't mean you'll be wrong, right? But when you want to look for bull flag, say bull flag is all you want to do. You want 3 or more attempts at highs, 3 or more. 1, 2, 3. Then we get the breakout, right? But not a gap. Price just opens up and goes higher. Then we get a little bit of a gap here, right? Now this thing's got some momentum behind it. A little bit of a gap here, right? Traders are in this thing from right here. Traders are in this thing. This is when the plane is taking off. This is when you want to be in AMD. Right here. Now see, I took the picture of this slide. I made this slide on 9/21. And I just talked to one of my coworkers about AMD yesterday. So I don't want to don't feel no kind of way. We teach and we learn. We helping each other. Right? So this is AMD. This is my new trader days. I don't know what's going on. I'm trying. What's a trend? What's momentum? Oh, is this momentum? Oh, is this a flag? Oh man, what's that? I mean, guys, if you stick with this thing every day, you're gonna start to see it so clear. You're gonna have the X-ray vision like Superman, right? And then you're gonna look back on yourself a year later. You're gonna be like, "Whoa! I can't believe I didn't know that. I can't believe I didn't know." But I'm glad I studied. I can only imagine what's to come the years after that, right? So boom, gap up, pull back into moving average, boom, gap up the next day. Momentum, 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 momentum. Then we get another little kind of a flag here. A lot of sell pressure in that thing. A lot of sell pressure, right? Traders want to see. Traders want to know. Are we going to get a gap above this thing, please? Please? Now, it's a beautiful lesson on this thing that I want to share with you guys, but I'll save that for another time. Just stick with it. Just stick with me. And oh man, this is like, I don't know, one of the best joys on earth, man. Look at this thing. Got your resistance level. Look at this thing. Even the resistance level right here, right? Let me pull out my pen for you. I'll be seeing these things, right? Say I didn't see this when I was taking the picture, because this one popped out to me. But look at this one. This is the real one right here. This is the one you want to be in. Did you see that? Did you see that? Look at that. You got a resistance level. Now, when you put your trend line on top of it, it's going to be more clean. Right? And you might have to stick it through that wick. It's okay. That's why you go, get with me. Get with me, man. If you want to learn this thing, you learning these videos, you learning these patterns and stuff, but you just don't understand, hit me up. I'll help you, man. This is what I love, man. I love this stuff, man. This is what I do. There's a few things in this world that I love, and this is one of them. So look at this thing. We get a gap up. This is the buy spot right here, right? That one, or at the beginning of this day, once it holds support and you can see it clearly going higher, you in that thing with a stop right there. Well, you got to stop here on this day. And then we out of it right here. When it breaks the moving average, when it starts breaking it pre-market, look at that. It starts breaking it pre-market. We out. That's it. That's it. We out of it right there. Bloop. No matter what happens. And then we got this whole chunk of profit right here to go spend on our family and friends. Well, not friends, but your friend. You a friend, you got to get it on your own, buddy. Word. We got this resistance level. Boom. Now, not to say, yeah, you got to get on your own. You got to get your own money. That's not to say we can't be friends. I'll help you. I'll help you. I ain't about to be shoveling no money on nobody that ain't put in the work. You know what I'm saying? Except for my moms and wifey. That's about it, man. My kid's going to be back trading. You seen them two little boys in here? They're going to be back trading on Thinkorswim. Thinkorswim, it has a function called on demand where it lets you replay the day. So, like, you can go to any day you want and then retrade it. And that's awesome. So, as soon as they're old enough to click the buttons and see, one's already learning about the breakouts. I'll bring them in right now. Test, breakout. So, they're going to be back trading, and they're going to be brilliant if they decide to stay with it and love it. But I won't force them. But don't worry, we got a gap up right here. But it's too late. Suckers gap. Then gapped up, but then this is what we do with the series of trades. Like I said yesterday, we think of it as a series of trades. We're going to go more into this, talking about the series of trades and risk management in the risk management portion of the class. But for now, I just want us to focus on these gaps. And I want us to focus on the patterns, these bull flags, these bounces, how they all merge and just become one, how they make the chart. You see? Oh man, dang. What was that? GWPH, that last one? That was SONC. All right, GW. We're gonna do two more, and then I'm gonna end this thing, man, because gotta go. All right, look at this GWPH. Look at that. Another gap right there. Might have been this gap, right? Maybe this was the one, right? But this was like chopping through the moving averages. It was chopping through the moving averages, but then you got a gap. You know, it holds a level. Gave you a nice little run up. Found some resistance here at the $164 area. You know, trended down, trended down, trended down. Now we got some downtrend resistance. At first, this would have been downtrend resistance right here. You can say that, right? This is why I say downtrend resistance can be finicky sometimes. First, you got that. Look at that strong break right there. But you got no volume. You got no volume followed by that break, right? Boom, stock comes up, finds resistance at around this level right here. Boom, so now we have downtrend resistance, right? Then we get the break right here. Then we finally get some volume in that thing, right? So we in it on this day with a stop right below our pattern, right below our moving average. You know, $150, you know, we could do the math when we're managing our own risk according to our account size. So boom, stock goes up next day. Stock goes up from 150 to 164, but then closes back down in the 150s next day. But it doesn't break our non-exponential moving average on the daily, right? Still doing swing trading a little bit here. So this is still the swing trade. This is the last part of the swing trading portion of the class. So boom, stock keeps going up, keeps going up. Let's see what happened with GWPH. Looks like it cleared this level right here, right? Let's see what happened with this thing. This is the last time I'm gonna do this, and then we got one more stock, and then that's gonna be the end of it. GWPH. All right, so that was this day. Let's look at the picture real quick. All right, so it broke resistance here at 140, came up 150, came up, and then this day right here was coming down. Let's see. That was on the 21st. So this day it came down. That was this day right here, as you can see. Let me move my thing so you can see. Remember, if you've been playing around with your TC2000, you're going to already notice. So look, you can see up here. Sorry. Oh, this is weird. Oh, you see the date right there at the top? You look in that little box? See the box? Friday, 9/21/18. That was that day. This is where we at. See, when you scroll your mouse on TC2000 over a candle, it gives you all the information of that candle. The high, the low, how much volume was traded that day. You see? Boom, and then you can hold it and drag it. It'll give you the value of how many days you're going across, but it'll give you the value of each candle, what happened. So on that day, you know, it didn't come back down to the moving average. It went up a little bit more, and then it finally broke out moving averages right here. So right around 164 area. So never went higher, really. Like I said, it could be market conditions, man. That's important, man. Market conditions are important. They are important. So you may say, oh man, this guy's showing us all of these breakouts. If you're still here, you may say this guy's showing us all of these breakouts, but they're failing. All the breakouts, then none of them work. This guy doesn't know what he's talking about, right? But we have to be mindful of market conditions. We're at the top of a 10-year bull. Now we're almost on the backside of a 10-year bull. I'm not going to talk about this no more, because if you were watching, you would see. But I'm just know the patterns. Know the patterns, because although we do have to be mindful of the market, it's still opportunities are endless. And as we're out there, we're searching through our charts and stuff, we're going to see these things. They're going to pop. There's still going to be some that work. There are stocks that trade opposite of the market, such as TZA, TVIX, you know, I think SDOW. There's a bunch of ETFs that trade opposite, and we're going to start seeing these flags. If the market continues down, we're going to start seeing these flags on the ones that trade opposite of the market to the upside. So they're there, man. Now, one more, guys. One more. That's GWPH, ARWR. ARWR, I mean, it doesn't get any more clear than that, right? I mean, this is not the best one, though. Remember what I said, right? This one is a little bit stressful to the eyes. It's a little bit stressful to the eyes. You know, as it broke these moving averages right here, breaking this beautiful uptrend, higher highs, higher lows, flag, you know, breakouts, higher highs, higher lows. Then we get this this crash right here, this crash pullback. Small bounce into the moving averages. Moving averages on top of his head, right? Boom, came and bounced off of your 50 moving average back into this resistance area, right? Then may have been some good news out in this day. We got a gap up, right? Now, intraday, we could have capitalized off this gap, but as a swing, would you have gotten in it? Maybe, right? You can get in it. Think of it as a series of trades. You lose 1% on your losers and you make, 3 to 4 to 5% on your winners or something like that, right? But on the daily charts, these trends are huge. Say we catch one and it goes up. Say I only want to use my 50 moving averages as my stop loss. You can do that if that's what you want to do. So, but this one here, it pops, doesn't get much continuation, fails. And this is, I'm not going to jump ahead. Just now you're able to identify the gap up, plain and simple. You can show anybody now. You are able now to teach and show people the gap in the stocks chart. You're able to see. I hope you're seeing these things clear, guys. So that's about it, man. The next class is going to be on the gap downs, right? I'm about to go spend some time with the fam before I got to go to the day job, before I'm done with that. So, man. I'm ecstatic. Thanks for watching, guys. See you in the next video. Peace.